Hello, folks, and welcome back to our channel. Today, we're going to explore a topic that is always on the rise: investments. With the constantly evolving economic landscape, it's crucial to stay abreast of the best opportunities to make your money work for you. In 2024, the options are vast and diverse, but how do you know which ones are truly the most promising? Well, that's what we're here for. Get ready to discover the top 11 investments for this year. Regardless of your financial goals or risk tolerance, there's something for everyone on this list, from more traditional options like savings accounts and CDs to bolder investments like stocks, cryptocurrencies, and real estate. So, grab pen and paper because you won't want to miss any of these valuable tips. Let's get started. But before we dive in, don't forget to like the video, leave your comment, and subscribe to the channel to stay always updated. Thank you. Investing is a smart strategy to make your money grow responsibly, allowing you to participate in economic growth and protect your funds against inflation. This reality is especially evident in 2024, a year in which the three main indices, the S&P 500, the Dow Jones Industrial Average, and the Nasdaq, reached historic highs. The S&P 500 surpassed the 5,200 mark, while the Dow exceeded 39,800 for the first time. Maybe you think that investing is reserved only for the wealthiest, older, or more experienced in their careers than you. But that perception is far from the truth. Before we continue the video, allow me to introduce an offer that can completely change your financial trajectory. Access the link in the description below and discover an extraordinary opportunity to earn money significantly and sustainably all through the internet. Don't let this chance slip away. Truth. A wide range of investment options is within reach of almost everyone, regardless of age, income, or career stage. However, these factors will influence which investments are most suitable for your individual circumstances at this specific time. For example, someone nearing retirement with substantial savings will have a much different investment plan than someone just starting their career with no savings at all. However, neither of these profiles should avoid investing. The key is to select the most suitable options for your financial needs and goals. Here are 11 of the best investments to consider, generally organized by risk level from lowest to highest. Remember that lower risk investments tend to offer more moderate returns. Follow now the 11 best investments. High-yield savings accounts, online savings accounts, and cash management accounts offer higher returns than you would find in a traditional bank savings account or checking account. Cash management accounts are a kind of hybrid between a savings and checking account. They can provide interest rates similar to savings accounts, but are usually offered by brokerage firms and may include debit cards or checks. Ideal for savings accounts are ideal for short-term savings or funds that you only need to access occasionally, like an emergency fund or for vacations. Transactions in a savings account are limited to 6 per month. Cash management accounts, on the other hand, offer more flexibility and similar, or in some cases, even higher interest rates. If you're just starting to save and invest, a good practice is to keep between 3 and 6 months of basic expenses in an account like this before allocating more resources to investment products further down this list. Where to open a savings account? Due to lower operating costs, online banks often offer higher rates than traditional banks with physical branches. Where to open a cash management account? Investment firms and automated advisors like Betterment and SoFi offer competitive rates on cash management accounts. Certificates of deposit, CDs, represent a safe way to save money with fixed interest rates for a specific period. Ideal for CDs are ideal for funds you know you'll need at a future date, such as for a down payment on a house or a wedding. With common terms of 1, 3, and 5 years, they offer a secure option to grow your money for a specific goal within a defined time frame. However, it's important to note that redeeming a CD before maturity may result in penalties. Like with other investments, do not invest in CDs with money you may need soon. Where to buy CDs? The best CD rates are often found at online banks and credit unions due to lower operating costs. Bonds are a relatively safe fixed income option for investors, with government bonds being one of the safest choices. Government bonds. These bonds represent a loan to the federal or municipal government, offering interest payments over a defined period, usually from 1 to 30 years. While safe, returns on government bonds are generally lower than other investments due to their stability. Ideal for conservative investors seeking stability in their portfolios. Where to buy government bonds? Individual bonds or bond funds can be purchased through brokers or directly from the government. Corporate bonds operate similarly to government bonds but represent a loan to a company, making them riskier. However, they also offer potentially higher yields. Ideal for investors willing to take on more risk in exchange for higher yields than government bonds. Where to buy corporate bonds? Like government bonds, they can be purchased through brokers or investment funds. Money market mutual funds represent a distinct investment product, differing from money market accounts, which are essentially bank deposits similar to savings accounts. When you invest in a money market fund, your money is used to purchase a variety of high-quality, short-term debts issued by the government, banks, or corporations. Ideal for money market funds are suitable for money that may be needed soon and for investors willing to take on slightly more market risk. They are also used as part of a portfolio to hold a safer cash reserve than stocks or for future investments. However, do not expect significantly higher returns or greater risk compared to other investments presented here. The growth of money market funds is closer to the yields of high-yield savings accounts. Where to buy? Money market mutual funds can be purchased directly from a mutual fund company or a bank, but the widest variety will be available at online discount brokers. You'll need to open a brokerage account. Mutual funds are investment vehicles that pool money from various investors to purchase stocks, bonds, or other assets. They offer an affordable way to diversify your investments, spreading your money across various assets and thus protecting against losses in a single investment. Ideal for mutual funds are ideal for those saving for retirement or other long-term goals. They offer exposure to potentially higher returns from the stock market without the need to buy and manage an individual stock portfolio. Some funds focus on specific sectors, such as technology or biotech companies, allowing investors to focus on investment niches. Where to buy? Mutual funds are available directly from the companies that manage them, as well as from discount brokers. Most mutual fund companies offer funds with no transaction fees, although they typically require a minimum initial investment, which may be waived if you agree to set up automatic monthly investments. Index funds, on the other hand, are a specific type of mutual fund that tracks a market index, such as the S&P 500. Their goal is to mirror the performance of that index, unlike actively managed funds, where a professional selects and manages the fund's holdings. Ideal for index funds are great for long-term savings goals as they generally have lower management fees and are less volatile than actively managed funds. They may be particularly suitable for young investors with longer investment horizons who can take on more risks and invest more in stocks than in more conservative investments, such as bonds. Investing in index funds can be an effective strategy for young investors who can withstand market fluctuations over time, as highlighted by certified financial planner Delia Fernandez. Where to buy index funds? Index funds are available directly from fund providers or through a discount broker. Exchange-traded funds, known as ETFs, operate similarly to mutual funds, pooling money from investors to purchase a variety of securities, thus offering diversified investment in a single transaction. However, the difference lies in how they are traded. Investors purchase ETF shares the same way they buy individual stocks. Ideal for, like index funds and mutual funds, ETFs are suitable for investors with long-term investment horizons. Additionally, they are an excellent option for investors with limited financial resources since the price of an ETF share may be lower than the minimum required for a mutual fund. Where to buy ETFs? ETFs are traded like stocks and are available through brokerage firms. Additionally, robo-advisors often use ETFs in building their clients' portfolios. Individual stocks represent ownership of a portion of a company. They generally offer higher return potential compared to lower-risk investments such as government bonds, but are also subject to higher levels of volatility. Ideal for investors with a well-diversified portfolio and willingness to take on a bit more risk. Due to the volatility of individual stocks, it's recommended that investors limit their individual stock holdings to 10% or less of their total portfolio. Where to buy? A convenient way to purchase stocks is through an online brokerage. After setting up and funding your brokerage account, you'll be able to choose the type of order and become a shareholder in the company. Here are detailed instructions on how to buy stocks. Dividend stocks combine the fixed income benefits of bonds with the growth potential of individual stocks and stock funds. These stocks offer regular cash payments, known as dividends, distributed by companies to shareholders. Typically associated with stable and profitable companies, dividends can make these stocks attractive to investors due to their stability and income flow. It's important to note that dividends in taxable brokerage accounts are taxable in the year they are received, unlike stocks, which don't pay dividends, which are generally taxed when sold. Ideal for dividend stocks are suitable for a wide range of investors, from beginners to retirees. Young investors may benefit from companies that consistently increase their dividends over time, while older investors seeking stability or fixed income may prefer stocks that offer consistent dividends. Where to buy? Like other stocks, the easiest way to purchase dividend stocks is through an online brokerage. For more information on high dividend stocks and how to invest in them, see our article on the subject. Alternative investments encompass a variety of assets beyond stocks, bonds, and cash equivalents. This includes gold, silver, private equity, hedge funds, and even items such as currencies, stamps, alcoholic beverages, and art. Ideal for investors, often accredited, seeking to diversify beyond traditional investments and protect themselves against volatility in the stock and bond markets. Where to buy? Some online brokers offer access to certain alternative investments, while others may only be available through private wealth management firms. However, there are also ETFs that track assets such as oil, gold, and private equity, as well as companies related to these assets, such as gold mining and refining companies. Cryptocurrencies are digital forms of currency based on blockchain technology, which are traded peer-to-peer and circulate without the need for a central bank. They can be used to purchase goods and services, functioning similarly to fiat currencies. Bitcoin and Ethereum are among the most well-known cryptocurrencies. Cryptocurrency ETFs, in turn, generally consist of baskets of securities that include shares of publicly traded companies involved in the cryptocurrency industry and are traded like stocks. However, with the approval of a spot Bitcoin ETF in early 2024, the most popular Bitcoin ETFs seek to reflect the price returns of Bitcoin itself. Ideal for some investors buy cryptocurrencies with the expectation that their value will increase over time, while others see cryptocurrencies as an innovative and enhanced monetary system. Regardless of the reason for investment, cryptocurrencies are known for their volatility and should be treated as a speculative investment. Where to buy? Cryptocurrencies are traded on centralized exchanges, where tokens can be exchanged for cash, or on decentralized exchanges. Centralized exchanges vary in terms of fees, investment minimums, and account requirements, as well as in the ease of cryptocurrency withdrawal. Generally, there are no such restrictions on decentralized exchanges, but you'll need to trade using your own wallet, which implies its own risks. Investing in the real estate market traditionally involves buying properties to resell them later at a profit or holding them to generate income through rent. However, there are several other more practical ways to invest in real estate. A common option is through real estate investment trusts known as REITs. These are companies that own income-generating properties such as malls, hotels, offices, among others, and offer regular dividend payments. Additionally, real estate crowdfunding platforms, which aggregate investments from various participants to finance real estate projects, have also gained popularity in recent years. Ideal for investors who already have a solid investment portfolio and seek greater diversification or are willing to take on more risks in exchange for potentially higher returns. It's important to note that real estate investments tend to be highly illiquid, so investors should avoid allocating funds they may need to access quickly. How to invest in real estate? Some REITs can be acquired on public stock exchanges through online brokers, while others are available only in private markets. Similarly, some real estate crowdfunding platforms are open only to accredited investors, while others impose no restrictions on who can invest. When choosing the best investments in 2024, always remember to consider your timeline, risk tolerance, capital availability, and need for assistance. Based on these considerations, you'll be better equipped to select the most suitable investments to achieve your financial goals. I hope the information shared in this video has been helpful in guiding you on your investment journey. If you found the content valuable, don't forget to leave a like and share it with your friends and family. Thank you very much for watching, and I wish you much success in your financial endeavors in 2024 and beyond. Until next time.